Good afternoon, all. Running a little bit late. It's about 5:18, 5:19 p.m. On Wednesday, August 31st, 2022. It's the last day of the month, and we got a little bit busy. Let me do couple of real quick housekeeping features because a number of our other members who are not involved with PMT still watch this, and so it's a chance for me once a week to update everybody who can see that their leisure. First of all of these are recorded and posted here on our YouTube channel. As you notice, we've just installed one today, added one today, which is our HAORB, opening range balance, breakout, opening range breakout, day trading system for NQ version 4.67 for September software key. As you know, we do this once a month. We added a feature because the system has been doing good, and a gentleman came in and says, I don't want to do 3 NQs or 30 MNQ. These are NASDAQ futures, both mini and micro. I want to do 6 or 9 NQs. I told him, hold on, let me talk with my XO here, that being Admiral Tico, and see what he says. Admiral Tico came and said, no, drink some tea and read some Rumi. We'll let you go to 6, because he's done very well last couple of months. But even though it's been a tough market, part of his size. You have size, you can hold. You can hold the position. And we'll let you go to 6. We'll talk about 9 in a couple of months. You just can't ramp up. The fear is this. You have a time series that gives you your return, whether it's actual or expected, and then you double down or triple down. One mistake, you wipe out everything. A mistake could be from you, could be the market being crazy, could be caused by White House, could be by Fed. Anything is possible. And then you got to be very upset with yourself or with me, with the software. And software, one thing a software cannot do is predict no audio. You guys cannot hear me? Audio check, please. Audio check, please respond, guys. I thought audio was good. Audio is good. Audio is good. Greg, you may want to recycle. Greg, you may want to recycle. Hold on, let me make that note to him. Nancy and Cash, you guys need to respond to these, okay? Look at the questions, and if you can help me respond, okay? But let me answer them here. Hold on. Okay, why is it not letting me? 1 second, guys. Sorry. What am I doing wrong here? Huh? Hold on. It won't let. Oh, there we go. I gotta have to pick here then. Send to all. Okay, so where do I type it? There we go. Okay. That's it. I'm sorry. You may want to recycle your GoToWebinar. When that happens, typically it's you. It's not us, because others are not reporting this. Hold on, let me pick that here. Okay. Oh, there we go. Thanks, Cash. Bravo. Yes, that's it. Yes, thank you, guys. So audio is good. Yes, good. All right. So what we did was that we said, let's go to 6. Now we had to change a couple of names, because now we no longer was just NQ. Now it's NQ3 or an NQ6. That allows us to go to NQ9 someday. So we did that, of course, end of a month. Then we did a video of it. There were questions in the room. A couple of our most experienced traders are absolute, have no clue how to TradeStation. You can change that. I guess I've spoiled them. I send them turnkey stuff. Here's the page, here's the indicator, import both, turn on, boom. So this time I said, guys, you got to get more proficient. That's why we have a questionnaire, to see what quality of the TradeStation user we're working with, because this is live. It's fastest game in town, a lot of money on the table. You got to be good at it. Well, one of the simple things is how to manage the indicators and systems on your end. I'm not there with you. You know how many clients we have? It's mission impossible. You need to be self-sufficient. And I put him a little test, and about two of the best guys I have failed. So I said, you know what? And one of them suggested, says, is there any way we can do a little webinar on that? I said, sure. We'll do it in the afternoon because system only trades during daytime. At 12:15 Eastern, it goes flat. So at 2 o'clock or 2:30, I invite a bunch of people to come in. I told them it's going to be recorded. The recording is done and it's posted here. Okay, so again, please go through that. This has to do with this little bit more than normal, sophisticated, not complex, but just sophisticated. You got to watch it. What you're doing. Key for September is a software key. They're issued every month, and we do it now so we can test it. Everything is fine. So tomorrow morning, you don't have problems going. I need help because I won't be able to help you. There is no tech support at the open. We just can't. We've said that ad nauseum. That's why you get a little bit earlier. And of course, we cut off our end of a summer special yesterday, so we could have time today to do it orderly. We can't keep it in flux because you have to issue keys, and you have keys for indicator, you have keys for strategy. These are different. And also, you need to import the TSW file. Longer story short is here. Having said that, we're going to have another open session, open house, somewhere around September 15th. And today we're here. Remember, for open session, you just click and come in. No emails or anything either, because it's just simplest. You don't get to see the Zoom OTFs. You just get to see GoToMeeting. Just concentrate on one item, what the system is doing. Okay, it made $6,800 yesterday, or 55% return in 2.5 hours. At one point, it was up about 10,500 at peak. So, and that's the time I usually get on the mic and say, "Get the F out of here! You got 10 grand. You got to book this. What are you doing with a $12,000 margin? That's 80% return. Or that's 80% return. You made it in 2 hours. Tell me another investment that does that. Now, it doesn't happen every day, but when it moves, and now we get entering the volatility period, September, October are the highest volatility, and then you have a reversal way up to the for the money managers who want to make their bonus for year-end bonus. So it's we drop here and we rally. As long as it moves, this system will catch it. The system is not good in July, and we saw that. Now February was a different situation this year. Last year, May, we didn't do much with the system. It was a back test. I realized that. But again, that was another good example. We went sideways. There was 5 days in May, I think it was second week of last year, 2021, that I think the average range was like 15 handles. You can't make money there. I don't care what you're doing, a system or by hand. If it's not moving, you're not going to make money anyway. Who cares you're using a system or not? But we can't predict that. It's going to be part of the game. There's going to be some months that within it, a week or so, it's just horrible. So, but now we're entering volatility, and you can sense it. You can sense it. This thing is going to be big. I'll bet you probably Friday is going to be big too because of non-farm. So that's what we're working on today. Now, let's get to economic calendar, and then we're going to get into my timer digest call. Actually, I'm going to show you, just as a little precursor to that we took. If you look at from here to there, if you look at this area from 2nd of October, okay, we had a short, we had a long. We went short on the 2nd, reversed it. I just couldn't hold on any peak. Yeah, there was a bad trade there in January, but look what we have done since then. I added these numbers: 5 trades in a row, 752 handles. That's a sum of February 2nd to now. We went flat last night, and that's equivalent of almost, if not more, 7,500 Dow points. As a matter of fact, we took 3,400 Dow points just in the last. Let's see, you got to count it from here. In the last month and a half, no, last 2 months, just absolutely nailed it. A long and a short. Now, I still think we're going to go lower. I'm going to explain why. But by the way, that's the chart. That's what creates this chart. This chart is created based on that data, because there's a lot of stuff here. You got to keep track of it. as you take action. And then remember, the SPX we put in is when we're in the market. If we're out of the market, nothing changes. Even though SPX is moving, because we're not in the market. We're measuring when we're in the market versus what SPX is in the market at that time. You could see as this thing begins to drip down, we're pulling up to all-time high. That's why spread now is over 100% over 6 years. That means we have beat S&P by 100%, 102% in 6 years. I would suggest you go to, I'm going to be cocky here a little bit. Go to Morningstar, look up any money manager who's done that. That's 15% a year on average, beating it. Now, sometimes we've done better, like this segment here, of course, here. We really killed it. And we do the best when the market's dropping. Why? Because we can go low, short. Market can't. Market is buy and hope. This is most of the money managers, most of the portfolios by 401k, or if you like to call it 201k. So with that area, I think if September delivers what I think it's going to deliver, which I'm going to get into chart-wise, this could be back to 150 area. It could be done. Because remember, it's like colliding two cars head-on. You add the two speeds, right? If you're coming at 60 miles, the other guy is coming at 70, it's a head-on. It's not side-by-side. Head-on, that's 130, what do you call it, mile collision. It's like going to 130 miles hitting a brick wall. That's like 60 million pounds of force. That's being released. It's not a joke. Same thing here. Why? People panic and we're short. So that's how these were done. Of course, here we managed really nailed the bottom. But that was luck. So anyhow. But that's how we keep track of it. That's where those charts come up. Okay. Let's get into Econ Calendar first, and then we get into nitty gritty of Timer Digest and our chart. By the way, one more thing. We're gonna get into that too. We did a full issue. Sunday we did a full issue, and now this is fixed too. This was our access to, without logging in, you can see a preview, except when you go there to look at the current, it keeps 4 issues behind. So you cannot jump in and trade it. Okay. It keeps a 4. Now there's some duplicates here because I was inactive. We're going to catch that up too. But now I put a full issue on. I'm going to go over that, but I have to log in. Okay. Which is basically the charts I used. But that was on Sunday. Now, we did not take a trade itself. We gave it for Pro. We gave it bias for the what do you call it? For the basic package, and we were spot on, obviously. But we did not give a trade. Why? Walls are too high. When the walls go high, as a matter of fact, we will be discussing that in the chat room today. Peter Cook, our main moderator for NQ and ES, wonderful guy, experienced, and no nonsense type of a guy. He actually warned one of the guys not to try to get into a put spread now because the walls are way too high. If you didn't catch it early like we did, and ride it, getting entry now could be very expensive. Now I'm going to also show you that I think we're near a bounce and why. Okay. All right. Today we had the ADP, and that was a surprise. Okay, ADP missed. Okay, ADP missed. ADP has been doing good, and now all of a sudden missed. The revised prior was 268. Consensus 225 became 132. This came out at 8:15 this morning, 7:15 Chicago. Not good. Let's see. PMI Chicago came up. I think it was slightly better if I remember it right. Yeah, tiny bit better. You know, it passes the prior by 0.1%. Consensus was the same. Range is always tight with the Chicago PMI. We're at 52. This is Midwest. This is auto. This is what matters is auto there. Okay. I don't look at this other stuff. I don't look at the EIA. I don't understand oil. These two rascals talked. Bostic is from Atlanta. Who is Lori Logan? Logan. I don't see her name. She must be new. Yeah, I don't know She doesn't run. She doesn't run the FRB, so she must be a board member. Yeah, board of governors. Okay. Tomorrow we're gonna have jobless claims, productivity, PMI, but I want to watch ISM manufacturing. Okay. Remember, the economy runs on two things. Non-services. It's auto and housing. So, and a lot of that involves a lot of manufacturing, especially technology now, because the houses are all high tech now. 52.8, 52, 49, 53. Okay. So this thinks that we're going to down tick a tad, and we're near the upper end of the range. Okay. Let's see how it comes, and then look at the market action. Actually, Ani is here. I really want to acknowledge that. Ani helps us with the econ calendar in real time. As a breeze. It's very helpful in the chat room. So let's go to Friday. Big day Friday. Bostic speaks again. Jesus. Okay. Factory orders. Let's do that first at 10 o'clock. By the way, the system we're working on soon will be able to trade non-farm, which is work at 8:30 in the morning. So that's not a small change. Probably taking about a month to take to finish and back test it and kind of sign off on it. I have a team that does the beta test, the programmer who does the programming, and I do some spot checking on the code, and then we got to sign off on that. So, but that's probably a month away. But that allows us to trade anything at 8:30. GDP, retail sales, new homes, that kind of stuff. And of course, the big daddy of them all, non-farm payroll, which would be Friday. Okay, first factory orders. Oh wow. Oh wow. Oh wow. Jesus. Month to month is gonna drop by 10%. Yeah. See, I don't understand this. How can we have these and we have 400, 500,000 new jobs? Doesn't make sense. Because jobs brings payroll, payroll goes and spends. Retail is strong. Retail is not soft. Retail is strong. So people are spending it. So this we'll see. This is gonna be. We probably have to look at this very carefully on Friday. An hour. Half an hour after the cash opens up, because this is an anomaly. Now let's go to non-farm. My favorite day. And remember, those who live by the sword shall die by the sword. It's difficult. Yeah, non-farm is not easy. 528, and now looking at it at 293. Okay, that's more reasonable. Yeah, anywhere around 300 to 400 is reasonable. When you get to 528, there's no recession. It can't be. Numbers won't allow you. Of course, part of our problem is the inflation is coming in from material and payroll inflation. So we just have of those available to work. Remember, don't get me wrong. Those available to work and intent to work, only 3.5% unemployed. We haven't had these numbers this good. So, but maybe some people just don't want to go back to work. Right? I understand. Look at me. I've got double COVID since last week of June. So there you go. Private payrolls. If we missed ADP, we're gonna miss this too. That they usually go hand in hand. There's a reasonably good correlation. A little bit noisy because of the nature of the data, including so that you have to look at revisions because of what this is, the nature of the data and its capture or gathering of that data. The revisions are key. So not that I would just looked at what this number is going to be versus consensus. I want to know how much 528 was revised. So that's crucial. Now, I don't see how 471 here is going to stand. That was prior. 280 is going to stand because we did so poorly today with ADP. I would want to look at manufacturing. I want to look at housing. Housing is not shown here. But if you go to BLS.gov, Bureau of Labor Statistics, now just be patient. Everybody has brothers trying to do that. Every hedge fund has got a couple of quant PhDs sitting there trying to go in there and get that data quickly, right as the number comes. That's why sometimes you see reactions to it later on in the day, because there's so much things you got to pick up, put it in a model, see what the model says, and then send it to traders. Traders start reacting. But I want to look at manufacturing. I want to look at also construction, housing. I give up on participation rate. Yeah, it's not my thing. It just doesn't respond anymore. So I also want to take a look at the hourly earnings, but more importantly, average work week. And so we've been upticking a tad. We were 3.4, 3.45. Now we're doing 3.46, pretty steady. It doesn't move much. Again, it doesn't. Sorry about that. That's the windows. It doesn't move much, but you could see it's sitting at a pretty tight consensus range. Okay, so that's what's ahead of us for this week. By the way, we also did a test for where we have a economic calendar with a major data at 10 o'clock. Now, that's not major, that's green. Let's say we have this one, consumer confidence, okay? ISM tomorrow. We did a back test and we did a live test. The live test came so. One of them, the other one had a loss. Actually, the system did better if we had not tweaked it. We didn't put the delay. What we did here would delay the system not to trade until a couple of bars after this news is out, so that we're not driving into a brick wall as the number comes up. Well, turns out we did a 2-year back test, and one of the guys came in and took all of this data from September 1st, no, from August 1st of last year to end of this September. Now, of course, we can't back test the future, but we had 14 months ready, loaded into a machine in the trade station. Our code count went up 200 lines. Plus, the load dropped because there's a lot of data it has to load. Plus, then it has to reflect it on the indicator, okay? Because the dots move. Our indicators show some dots where the decision points are. So that created havoc into the loading. But once the load was complete, the machine ran fine. But the bottom line was this. That was more interesting. And here's where I could put it. Here's how I can put it mildly. We could not see a significant difference in the results. We would be up one day when we had a 10 o'clock, and then like here, okay, like right down there, right here, there we go. Right down there. Do I have a thumb drive? No, okay. I don't know if you've noticed or not. Some thumb drives interfere with your mouse. So if your mouse is not reacting well, especially on Windows 10, take the thumb drive out. Anyhow, someday it would work fine at 10 o'clock. We'll get a little bit extra gain, and then we give it back the following day. Usually you get 1 or 2 a week maximum. Now, it's not all weeks, I think week 3 and week 4 you have more. But then this fellow researched it, put it in a Google Doc so we can review it and collaborate, and we abandoned the project. It was called BND, Big News Day, that module. That's how we've developed the base, and we've built the periphery around the code, the code core. So what we're doing now is just adding one piece to. We're doing 2 things. One is the volatility exit. Actually, I have a better idea today. I'm going to go over it perhaps this phone call. And there's a little bit more work involved, but it has to do with actually a volatility measure separately from what I've done. So we're going to add a little bit of code. We also did. We're also adding again the variety chance, because now we have full global data. Globex. I'm saying Globex data. So you have data before the open and after the open. This allows us to trade for non-farm, that module, and now now it's much easier also taking that, create a module for what do you call it, for last hour, what's called H hour, between 3 to 4 Eastern. By doing that, we potentially have 3 systems running together. You have 3 times it starts and stops. For example, the morning period, which I know this comes up, that's why I'm recording it here, would shut off at like 9:15, 9:20. So you start the cash clear. You don't carry it, okay? That kind of stuff. Same thing for the what do you call it? Last hour. Most likely, we'll shut off at 3:48 p.m. Why? That's when Newman comes. Newman is a trade that we call Newman because it's big, just like Newman and Seinfeld. And that usually comes at 350. Another key trader of ours brought that to my attention, and it works like a clockwork, both in ES and NQ. Of course, in NQ is more pronounced because of the beta, but we will be out a couple of minutes before it. Why? You don't want to have a system go through a brick wall like that. If it goes the other side, you get chopped up big time. So these are the stuff we're working on. That probably is going to keep us another couple of months busy. By then we're done. And probably software is going to be called 5.0 once it's done. Right now we're working on 4.8. It's been a long journey. If you care to see what we have done, it's here. There's a calendar down here. Aside from performance, all that, there's a calendar to see what we have gone through, all the different versions. That's where we are. And we did it for 4.67. We added warning dialog boxes inside. So if you're doing something wrong, you won't get embarrassed by calling me. I tell you, hey, what do you do this for? Oh, I'm stupid. No longer you need to admit you're stupid. The machine will tell you are, or something like that. Or here's your error. Sometimes it's a small error. It's not being stupid, but just a small error. Like changing your bar interval. You can't do that. So if it's not 3 minutes, it warns you. And first thing it does, it cancels the strategy, so you don't go in by mistake. All the charts are posted. You have it in both MHT and the XLS, which reflect many, many charts of these. Did a cut, as you see, this is a 4.6. With a $12,000 margin, let me finish with that saying this is a 14x system. Yeah, margins are good right now. System is very, very powerful. As I said, yesterday made 10 grand. At the peak, it closed at around 7, 6, 8, 6, 9, something like that. Okay, let's go to charts. That's 546. Okay. Yesterday we closed, we went flat. Why? Because we were short from here. This was one of the fastest drops we've had. We closed slightly lower now, 31 handles. And look where we are, 290. This is launchpad mode. This is in our description. This is in our, newsletter. It's in the PMT. And speaking of that, let me log in here. So you could see, if you go to the current issue, we put a full, of course, this is updated as needed. This should be probably shown yesterday or maybe today. I haven't done today's yet. But of course, I'm flat. It won't make a difference. Yeah, we closed it as of when we settled. So once it's settled, it doesn't move. So until we take another position. Here's the timer chart. And by the way, this has what's called Lightbox technology from Google. When you click it, it goes full screen. So you can see it very, very nicely. So it's both it's not two different charts. It's not a thumbnail versus a big chart. It's one, but then it blows it up. Yeah, stats were updated. You can see the various ones right up, Again, SQ. We went over these, We're going to talk about this right now. Of course, the treasuries. Okay, so let's go to our charts. Negative 290. Right at the timer chart, there's a description of what launchpad mode is. We're there or next to it. It could be we could even drip down tomorrow, and the number will come soft on Friday, and then it's a rock and roll time because everybody and his brother is short here. And the market is there to strike with maximum pain. So it waits for everybody's hunky-dory and happy and then robs you. That's what I'm thinking. I'm thinking that we're going to rally on Friday. The big question is, do we rally tomorrow or not? Again, I'll take a look at Globex before I make a call. I may go long tonight. I don't know. But if I do, that PMT members will get it. And with a copy too that goes to the Timer Digest. We put them together now. Even though they're also a recipient of it, we'll put out there, the letter goes to them with a copy to PMT and PMT Pro. We're dropping. This is getting a lot. Okay, it's not a joke, guys. Look where we are on the thrust. The breadth thrust. So we're charging, and let's look what's happening with the volume. Nothing. We're not getting much of a spike. So I think it's dangerous to get long, but I think we also do for and that's my debate in my head, a dead cat bounce, especially when you get negative 290. Anything below negative 180, negative 200 is there. And I've seen this go up to about negative 380, and then it will rip your face. You will have like 600-point move on a Dow. On the Dow, yeah, in like 2 days, 3 days. I've had a 700-point move in 2 days one time. I think it was Thanksgiving of 2013 or 2014. I remember. Yeah, I mean, Thanksgiving dinner, Kendra and I at Union League, and we came back, and I said, Kendra, and she wanted to go to some friend's house. I said, Kendra, hold on. Look at what the futures are doing and how bad things were. Well, I was off by 1 day. The market even dropped on a small session, short session, on Friday. But right before the close, oh my God, it was a rocket that came in. The next 3 business days, Monday, Tuesday, and Wednesday, was nothing but up. And we would close at high of the day. Just like we closed at the low of the day on Friday, that means the selling is not stopped yet. We're out of time. It would open it would close at the top of at the end of the day, at the very high. So that's what we had. 2 years in a row, or 1 year with a 1 year in between happened like that. We're almost there. So I don't know. Maybe we'll get there tomorrow. I'm debating that, but we'll see. Probably have to talk to a couple of people. Excuse me. Who are smarter than me. Sorry. Long hours. Very long hours. Okay. Transportation, Russell. Russell at 50 bar. Transportation took this without. So I still think we could drop. So we could drop tomorrow. And I may go long tomorrow night. But my feeling is that the numbers are gonna ease off. We're not gonna do 500. ADP is doing that, but of course it's dangerous. So we have to use this very, very tight stop. But if it goes well, it could be 2 or 3 days of massive move up as a dead cat bounce. And where will it go? Most likely, here's SPX. Let's time it on SPX. Fedor was sending me some comments on NDX. I'm not good at timing that. The beta is too high, and it's not a big. It's a good size of a economy, but it's not 80% of the market. 80% of the market. So I'm going to stick to SPX. Most likely we could see 4100, 4150. Nothing bigger than that. If we cross 0 sec, which is 20 bar, at this point standing at, as of tonight, at 4164. Let me refresh. That's a decent dead cat bounce. If we go above that, then we probably don't have a dead cat bounce. It's a reversal. So what I would do in those cases, I would go long, but would take majority of off at 4164. I won't be greedy and say it's going to go up to 4300. But then that's a 200-day coming down. It's got that slope. And we're negative. We're in the death cross. So both of them. That's when 50 drops below 200. Canaries. Okay, canaries in a coal mine. We still should drop a little bit more. This is the stuff you go through. By the way, I don't prep myself for this webinars. I do it live because more time. I want to be very authentic. I see an issue. I see it with you. So I do not see a huge drop there on CIDIF on transportation. Let me make sure that is the input is hold on, general. Yeah, that's a transportation. Yeah. I'm not seeing a huge drop. Actually, if you look at it carefully here, there's a little divergence. Much lower price in transportation, a little bit higher in CIDIF. So this could be considered a bullish divergence. Let's go to the trenders. Okay, so what? We hit 0, right? Because we're at 50 bars, so this has to be at 0. There we are. And we're at 7% lower on the 200 days. So this price is 7% lower than that. You normalize this so you get the sense of the tempo it's involved. Okay, 7.5 here, -8, -11. We're not terribly oversold, but that's where we're heading. So, but we take a pause first. I think that's where they want to bring the week longs, bring them in, and then send them to the slaughterhouse. The Max Payne concept. Market doesn't grow on trees. Neither does money. Yeah, you gotta force you to get you to the tight spot. So you give it away. So okay, we're still on sell. Someone has asked me what are those timing models. I just said in the last webinar. We don't get into that, but generally speaking, just get a feel that I'm a trend following guy, so I'm a breakout guy, and just like some of the biggest firms are trend following, like John Henry, the guy who owns Red Sox. You run it. You have a lot of small losses and then one big one, because you don't know which one is the big one. You have to take the trade. Okay. Okay. On SP1 and SP2. SP2 says I'm sorry, and Momo, not SP2. Sorry. SP SP1 we're at negative 2.5 sigma, close but not there. And Momo usually moves faster, so more agile. That's why negative 11.5. Also, this says we're ready to rebound. Now we could do a rebound like this: go up, come back down, but a little bit higher with a lower price in SP1, and then you go. These were developed for a hedge fund, and just I don't even distribute it out. Just used for this machine only. So that's where we are. To me, we're near a bounce. Can I tell you is it tomorrow or Friday? No. Do you? Should you care? No. It doesn't work like that. We're getting a little bit of new lows, tiny bits. And of course, new highs. We're too far from the high, right? So this is getting flat. It's getting flatlined here. But it also tells us that as we build here, we're getting closer to a low. So my low, I expect it to be Yom Kippur, 4th of October. Seasonality says, if you read Phil Erlanger in my book, chapter 8, I believe, right after my chapter, I was -7. Erlanger talks about seasonality, especially this area, which is between Rosh Hashanah and Yom Kippur. Old Wall Street adage, because people are not around, volume. You sell Rosh Hashanah and you buy Yom Kippur, and that's September 25th. So mark your calendar. September 25th to sell, and then it gets really, really bloody around 4th of October. That's Yom Kippur. The smart money starts buying a little bit sooner. Why? They can afford it. They got muscle. And then post Yom Kippur, you can see some big block trades coming in. Excuse me. VIX. Now I know Nancy's got a VIX trade on, but then again, that's Nancy. I'm not that smart. And I believe it's what 27.35 spread for September. I expect this to make some mucho bucks. She's done a great job with the option package. Of course, I think I won't announce it like this, but I would say a major firm out there is going to be featuring this package, because what Nancy has done, of course, recently, Cash Bocher has joined us. He's one of my friends from LA, and avid technical reader background in WE and Harvard, in MBA. So he's joining to help Nancy, and also learning more about options. But he's very, very good in due diligence and excellent with Excel. Of course, most of our work is done in Excel. So actually, Google Sheets. So it's collaborative. So we're going to update also our performance. We're catching up. We're slowly catching up. As I promised, I said, in June, of course, I didn't know I was going to have COVID and be down for a month and a half. As I promised you guys in June, one by one, we're going to bring these modules back. We did some, but not with vengeance. That's because I was too busy finishing the basic do's and don'ts of the trading system. So, and we were also starting it with a firm that automatically trades it, and automated for a bunch of friends who just they don't even know what TradeStation is. They can't even run it, and they have no time to go to chat room, and it's a small amount of money, so they run it automated, fully automated. But of course, I have to keep an eye on them and see what's going on, make sure they understand what I need. As a matter of fact, hold on. After this, I gotta work on that. They need code for tomorrow. Yes, Murray, they need code for tomorrow. So, code. for so SEP for these guys. Okay. Yeah, I gotta get that out tonight. Okay. I will. As I said, this was a big move we did. Now, yeah, I gotta do it there on yeah, okay. So we're in the channel. I want to see a test of this. Remember, it's inverse asset. So when you had the lows made in SMPs, you could see where the cycles are for VIX, what values are. It's approximately 35. I want to see 35 first, and then look for the fourth sigma is, which is this dotted line. Because we're not done until we hit the fourth sigma. You see that? We hit it here. We almost got there. We hit it there. We exceeded that. Remember, volatility cycles have more uniformity than price cycles. Especially if I go to weekly, I'm sure you've seen this chart. This is for those who just new to us. You could see the shock waves. Okay, you need that. This is how the system cleanses itself. It has to. It has to. So that's how it works. So now, one key area is also keep an eye on VXN, because if you're trading NQ, you want to know what VXN is doing. Okay, and also this is a better measure, in my opinion. Again, this is what actually I had this running first before Dr. Whaley. Dr. Whaley did VIX, and then we collaborate to make sure our data matches. VXN is an old VIX protocol, which is pure volatility. This one isn't. This is more for trading. This is for measurement. So I want to see where we end up here on VXN. I'd say 41, 42. I want to see that, and then right after it, I want to see where we are with the fourth sigma again. We can even get 5 sigma once we have gotten 6 sigma. Once. For that, see our blog, February 2009. No, 2007. The end of February, there's a fat finger issue. 2007, end of February. Yeah, there's one time the VIX hit +6 sigma. Remember, you're measuring it against itself. It's a vibration of the vol itself. Some people call it vol of the vols. Let's go to SQ. Okay, no tail risk. This is interesting. Or they're taking some off. They're beginning to take some off. Okay, as we dip down. Of course, you saw where we were before when we hit the lows. So we hit the lows here. You could see we're right about where we are now. The fair value now is about 124, 125, because the range has expanded to the upward and lifted the bottom. So we have 60 handles in that range. At 30 would be 141. The fair value, as denoted by 0 sig, is 124. Okay. Again, tail risk. There's a page there you can read. There's a PDF there. Let's see. Let me show that quickly for those who are interested to read. Okay, if you come here, there's a table and there's a white paper. You click that, it gives you the white paper. Better read it. Now, in case you're wondering, should this be considered what do you call it? Cure for insomnia? You bet you. So I would have it by my nightstand. Yeah, to this day. So that in case you're having a problem falling asleep, just open the white paper and that will do. It's a lot better than melatonin, trust me. It's a SIBO version of melatonin. Yeah. Okay, so that's there. Okay, now next chart: Treasuries. Wow. We go down and they're raising the rates. Yeah, the bond vigilantes are here, and they're well. Yeah, we're going there. You know, we're over 3% now on 10-year, and that's why when I told my friends last year, here, sell the real estate, don't hold on to it, and they argued like, what do you know? You're not in a trade station. I mean, to real estate. I said, I know. My last piece of real estate was sold in 2006 in Beverly Hills, and I'm happy. But it was also part of a settlement with the ex-wife, and fine, done. Of course, some of it went to this website. Here's the issue. I was a student of Richard Roll. The issue is the rate of change and whether we're inverted or not. 2.8 now. Remember, this is you divide by 10. But that's a compound. You have to compound it 4 times because it's 91 day. You need 4 turns to become one of these. These are true YTMs, yield to maturity, per annum. This is 91 days, so you got to multiply it 4 times. There's a formula for that, but anyhow, 2.8, but it will move up. So it'll be like 2.88, 2.89. Not huge, but there is. If you're pure about it and finicky about it. 3.2, 3.2, say 3.3. 3.1, okay, and 3.2 and 3.3 almost. So here's the issue: there's no risk between 5-year and 10, 30-year. You get the same yield. Something is off. Yeah, part of that could be what do you call it? The Fed. Probably they have a lot of these in their portfolio, depending which one they're selling or buying, in terms of what they feel, what the risk is going forward, especially now the GDPs, all that's been pulling back. That could cause it temporarily, but eventually we catch up. This is the direct control they have. This is the Fed funds, basically the 91 Treasury, 91 T-bills. These are T-notes, and then T-bonds. So what advice? As a matter of fact, I did say, I think March of this year, March or April, it was the fastest growth we had in the rates. There we go. Yeah, there we go. It's March. Look at that. Yeah, that's a 5-year. Look at it. Look at what it did in 1 month. Yeah. Here's your treasury. So cars. Yeah, this is overnight financing, commercial paper. Cars, auto, long-term insurance. You can see where we are. Let's go to TD. That's a 91. I'm sorry, 91 day or 3 months VIX spread. These are VIX futures. It's not VIX. It's VIX futures. That's what the market expects it to be. It's live. You can see it. It's getting updated. We take the next contract, which is current contract, I guess, which is September. Long September, short 90 days later, which will be December. And we're plotting it. And we put a sigma channel on it to measure its volatility itself. So it's a vol over VIX spread. Kind of a little esoteric, I understand. But I had to, I'm a vol guy, so I had to put the sigma channel somewhere in there so I can measure in my head where it is against itself. Obviously, you could see as we dropped Friday, post Jackson Hole comments from venerable Fed Chair Jerry Powell, this is what it did. And then it got very close to 0. 0 is up here. That would be a bottom. We haven't hit there. We came back. Now, this is no longer adjusted. In the 2020, the COVID period, we had to adjust it. Why? Everything was out of whack. You didn't have really, and part of it is this, you really didn't have a functioning financial economy. Okay, the financial structures were, because of liquidity, were dried up. So you had very much what do you call it, discrete pricing, and so now you have continuous pricing, a little bit more in line. The rules here were -3 or so was the top. We got to almost there. I mean, it could be 3.5, somewhere there. You got to give it some leeway. You can see from the index itself. And then near 0, that's the bottom. And the whole premise of this indicator is that where to find the bottom. Okay, much like what we do with Larry's chart. Okay, but that's not my work. That's Larry research by Paul Desmond. So that's that. So we're not there yet, but we're close. Same thing here, except look where we are now in SP2. Now, again, that was a question. What goes into these? We're not going to explain. That's my edge. I'm not going to give that away. I worked on this since 98, 99. And nothing really major changed other than the coloring. So you can see a little coloring when we're below or above. at least near where the turns are negative. I mean, positive. It's all positive. So it's positive 25, positive 75. We're in that. We're negative. We're at 17. So we're 8 handles below buy point. Can we go lower? Yes, I've seen a 10. I've seen a 14, a 12. So we could get there tomorrow. But I will promise you, we'll be much higher next week. Much higher. For what? It's a dead cat bounce. They're going to bring some longs. They can't keep selling it if there are no longs in there. They have to bring some longs in. So they, on the way to the slaughterhouse, will have a dead cat bounce. That's how it works. And this will be our first one to race up, just like they did here in June. In actually, yeah, mid-June. In mid-June, see what happened. Yeah, it turned on the 15. Bottom was put in on what 17? No, yeah, 16 or 17. Yeah, so that's how that works. That's what I'm looking for. We do still have also the rendezvous point of the 3 stock RSIs. Okay. By the way, in our chat, no, in our watch list, somebody said you have an RSI in there. No, it's RS. That's radar screen. Our indicators are built to work on both modes, either a screener, a scanner, if you will, which is the radar screen, or visual charting, visual, what do you call it, the graphic mode, where you're actually plotting something. So if you see an RS after one of our indicators in your toolbox, that's for radar screen. Of course, I think they give it away now. It's free. You have to just tell them I want radar screen, and your screen, this is a radar screen. If you go there, it's no longer doing code screen. It's radar screen because you have a basic, used to be basic code screen that comes with the software, radar screen's add-on. Okay, let's go to Larry's quickly. Larry says, we're not down there yet. We're getting close. A couple of times we have a bounce. So this is not the flush. We're certainly heading that way, but this is not the flush. The buying power index. We had a long and went to a short. Still a short. Went to a short. And this is a short. So all 3 are on the short, all 4 on the short side. Keep in mind, this is EMD. That's mid cap. That's E-mini mid cap. Volume is rated. I don't suggest you trade it. We just look at this. We don't trade it like this. We just look at it. I do both sides. Peter does longs only. And he wrote the code. I modified it to be able to work properly in TradeStation and with some parameters and some filters and so forth. So if there's an error, you get a message, that kind of stuff. Okay, what else? Last chart. Let's go to here. Again, from stock charts. Is that updated? Yes, it is. It says it is. Wow. Okay. Refresh. Yeah, okay. So what we do is, first of all, close this ad. Hate these. Let's go to 5 years so we get a better perspective. And you hit update. So we're using 20 and 50. Anyways, okay? We're at 29. We're hitting, we went below 30. Yeah, we're still going to drop a little bit. Yeah. This is very good for topping. It shows early on in topping that, soon we're going to be running out of steam. On the bottom, it's really, you got to get it down here. You got to get it to 10. Will we go down to 10? I don't know. Nobody knows. I can tell you when we were there what to do. I can't tell you what to do now based on this alone. Yeah. Again, my philosophy is preponderance of evidence. So it's a civil case, not a criminal case. I don't have to prove beyond a reasonable doubt because there's that vibration anomaly in the price action anyway. Nothing moves in a straight line. But you could see by smoothing it using 20 and 50 bars what's happening. We crossed here, by the way. So getting a little bit iffy. We'll see. But we also crossed here too. Can we get down here? Sure. Much down here? Much after that? No. I don't think so. But it could be a bloody 2 or 3 weeks forward. So be light. Be nimble. Any questions for me? Again, this is being recorded. The moment it's done, as always, gets posted in our video channel on YouTube, where we have quite a bit of traffic there, so that's good. They can see it. And then yeah, this is low because it went to members only. But over usually it takes 2 or 3 weeks when the traffic really builds up. We'll go back and review. We also make the PMT preview to work. As a matter of fact, I noticed this morning it was updated. So if you click here, if you click here, it takes you without the logging in. It goes to these pages. Okay. Before it would say you're not in visitor mode. You have to log in. That was a mistake. It was supposed to give us 4 weeks back, but we made a couple of moves on different servers. We went to a cloud on the Microsoft, what do you call it, cloud, Azure, and then we had a huge billing problem with them, which I almost left. And it turned out that they were stiffing us with 3. Are you here? Are you sitting down? 3 SSDs. We don't do anything here anymore. We don't do put call here. It's just a gateway. I don't even need 1 SSD. Well, it turns out you have to have 1. They won't allow you to have less than 1 because that's where the operating system is. And in the long run, probably safer than HDDs. And HDDs are too big. You don't even need it. Small SSD would do. So we settled with them. They refunded us like 2 months and a half. It went on for 3 months. I was too busy to worry about it. It just went on a credit card. I paid a credit card, and then all of a sudden I had a reserve on a credit card. And we bought some food for Tico. No, just kidding. He's got his own credit cards. Son of a gun. Long story short, we resolved that. So while we were there, we could not do anything. There's a lot of stuff going on that server. So you have to finish the setup. When you're moving, this to this and all that, no time to update. So now we fixed that too. Okay. Again, we're coming back, housekeeping as promised. Nancy's got a bunch of trades on TradeStation. I mean on HA options. Again, a major shop is option shop is thinks that we could do better than them in terms of idea generation. Why? We have the scanner. We have the IBD 250 scanner using our very high speed, not high speed, but zero lag indicators. And with the help of the Cash and Nancy, we've already started this ramp up, and we'll see how things go. But by the way, Nancy, if we get a move up, you may have to close like 50% of what you got, or half of these pushes for now, and take the profit because we've done good for 3 days. But you have to do that because you don't want to sit there and let data kill you. Remember, going in here, we paid some premium, right? Some Vega. The vol was high, so we just don't want to let that and data kill us. But there's another leg coming. We're not finished. Expected value for me that I'm looking at on TradeStation, I'll finish with that, is that I think going here, I think we'll take all of these out. I think finally, we hit the promised land, which is 3,400 to 3,600. There's a talk of 3,300. I'm happy with 3,500. But if you remember, in February, we had a trade on. This is the February, isn't it? No. February, this is it. We had a trade on here for if Putin went to Belarus and Ukraine, it was a 200 to 1 leverage. So $50 would have become 10,000. Well, we didn't exactly get there. It became 5 to 1, and then reversed. So we had to get out. But this is not then. This is a different problem. I don't know what the catalyst is going to be. Could be the nuclear plant they have. There'll be panic like you won't believe. I think we're dealing with a bunch of nuts. They have no understanding what we're trying to do. And they're trying to win a war by creating fear on poor and innocent people, non-combatants. It's incredible. With that said, I'm open for questions. And thank you all for attending. Get some sleep. Yes, I know, Michael. It's very difficult. You're quite welcome, Dennis. Okay. Okay. Question for Ani. Something big. What could be a catalyst for a drop to new lows? Something big. Can't be anything small we have. Market has to surprise you. It has to be. We have to be broad-sided. It's coming in from the left wing, if you will, or left part of the field. Okay. If it's something we're used to, it's not going to help us. It's most likely it's priced in, or somebody has a hedge against it already. Yeah, they're your quant PhD thing in these hedge funds making 400,000 a year, just thinking about for the next series of data time series from Econ Calendar, scanning Twitter for news, looking at looking at live wire stuff like Live Squawk or CNN or what have you. Look for keywords to 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 feed to be added to a model and say this is what we should be doing. And sometimes it works, sometimes it doesn't. But for this to work, we have to line up. To line up, number of events have to happen. As my dad would say, and he was not a safety officer. He was a fighter pilot, and but he was his later years when he went to military airlift command. He had the unfortunate task of going over certain crashes and decipher what happened, and some of them were their buddies. I remember one night he lost 24 of them. Oh yeah, he was a different person. Yeah, it was at nighttime coming from Shiraz, and weather was bad, and right before landing, probably 15, 20 minutes before landing, they lost the C-130 with a bunch of top pilots. And so, but you do that kind of study, and of course, for that, I think he came to U.S. He picked up the black boxes, the Khatami, head of General Khatami, head of Air Force Command, said, "You're leaving tomorrow." The moment they found the boxes for Washington, let FAA look at this because I've lost so many. What you find out in those, and as you can see from was it NHSD? Yeah, Safety Board, NHSB, I think. Uh, NTSB, I'm sorry, NTSB, National Transportation Safety Board. You'd see that it's not one event, it's not one flaw, it's not one link that's broken. There are a series of events back to back that create that critical path. When those are broken one after another for different reasons, then you hit a calamity. To get there, it's going to be more than one or two items. Now, I know you're asking, expect 75% from Jerry. Forget that. That's pricey. Zero CPI month on month. Okay. What would this give this market to sink to new lows? Could be the nuclear issue in there. I mean, the Chernobyl stuff, but this is the biggest. This is much bigger than Chernobyl. Could be something with Iran. Could be. It has to be something we haven't think about. If you and I have come up with it, it's not going to happen. Okay. Everyone is talking about the lows. I agree. What would surprise to the upside? Oh, sheer running out of sellers. We could be getting close to that. That's why I went flat yesterday. It was just too good not to take the points. Now, would I short again? Yeah. Would I want to go long? Very small possibility. It would be a dead cat bounce, very small. I'll decide tonight. But that would be a still dead cat bounce. Why? Seasonality. What you need to do, Duraj, is to ask that question, let's say about 3 weeks from now. 3 issues from now. Let's see. Let's go to a calendar. We're doing on Wednesday, right? Okay. Tell me on the 21st. Yeah, 3 weeks from now, maybe 4 weeks from now. Actually, 4th would be the best. Yeah. Now, I may take a week off, okay? And we also plan to do one on a Sunday rather than on a Wednesday. But we'll post it. You get the emails. We'll also post it on the website. As you know, if you hit members, it's there. It's right in front of you. We tell you what's our next meeting. And if you're already registered, don't worry. You're on the email system of GoToWebinars. This one, there's no email for it anymore. You just come in for the chat room or on that day, though. And that link is good for that day. Let's see. So, I think it's early, but I think I want to know in September. First of all, we got to get past 9/11. Nothing happens before that yet. Next Monday we're closed. 9/11 is on Sunday. So now we roll over on the 9th, right? Actually on the 12th. The rollovers are over the weekend now. Sunday night on the 11th, actually, we're going to roll over. First actual trading of the Z contract will be on the 12th. I'm thinking 21st is a summer. It's a fall equinox, not summer. Summer is gone. Summer solstice was in June 21st. This is a fall equinox, which is the diametrically opposed to spring equinox. As you know, often we turn around on that day. So there may be something on the 21st. If it doesn't hold, we're going down to the 4th. So somewhere in this area we need to talk. Okay. Obviously, I'll keep 21st. I'm not going to touch it. That's a summer. It's a fall equinox. Big day. Big day. Why? Gravitational force. Because of the movement of the moon and the sun versus Earth, we always make some of us go crazy. That always happens. Sometimes a little bit stronger, sometimes a little less. But that's 21st. And seasonality says buy on Rosh Hashanah and sell on Kippur. So no, the other way. Sell on Rosh Hashanah on the 25th, buy on Yom Kippur. So I think we're a couple of weeks early to Raj, but as we get closer, then we have a different tea leaves. And my job is to read them. I'll try to do my best. Anything else, guys? It's 6:30. Are we good? Okay. Good night, all. Thank you for attending. We'll do one again next week. I'm going to stop the recording and then post it the moment it's ready.